A lot of the global brokerages are expecting a 75 to 100 BPS cut by second half of 2024. But I mean, I was listening into Mr. Powell and team, well, the minutes that came out, it indicated that US, while they might be done with rate hikes for now, they are still a little apprehensive about, and they don't really have that appetite for rate cuts. And monetary policy, at least from what they are saying, at least it looks that it will remain restrictive. But the market is expecting a 75 basis to 100 basis point cut. And on the back of it, we have seen a tremendous rally across the board from US markets to emerging markets as well. But, what do you make of Fed's comment? Do you think that, this comment about, keeping rates and monetary policy restrictive, will that hurt the sentiment?
Really, in fact, if you see US markets yesterday, the markets did really tank after the Fed minutes were out. And if you look at the bond market, I think bond market by and large, to a great extent, I would say discounted and ignored the comments. See, the writing is on the wall. The Fed will have to keep taking a stand whereby they don't let the expectations run ahead of the reality. So they have to be cautious in their statements. And that's what pretty much all the central banks do. They have to ensure they need to talk to the market rightly. And Fed is doing that. So I don't think we need to read too much into the Fed minutes of yesterday. I think the data is what will drive Fed as well as the markets. And the data very clearly shows there is no need, no rationale for any further hike or keeping the rates high beyond a point of time. Now, if the data continues to support this thesis till, let's say, the first quarter or the middle of second quarter in the next calendar year in US, I think there will be tremendous pressure on Fed to really come ahead and cut the rates the way it is being anticipated.
All right, sir. I mean, to your point, what do you think is on cards? Can we expect a 75 basis to 100 points cut by the mid 2024?
Yeah, absolutely. That's exactly what my belief is also. But it'll all depend on the data, how the data comes. As I was saying, over the last 15 days, the entire scenario has changed based on the data. Now we'll have to carefully watch the data. And the joker in the pack, I would say, is the geopolitical situation. That also will play a significant role going forward. So we have to carefully monitor that.
Now, sir, you rightly mentioned that the three major forces, the three horsemen as we call it, oil prices, your bond yields in the US and the dollar index, they have moved in favor of the equities, and there's a risk on sentiment for the equities. And emerging markets is benefiting from it. Even in November, Nifty is up, I think, around 4% or so, but we are still relative underperformers compared to South Korea and Taiwan. Do you expect that to change perhaps, because our earnings season has been phenomenal, 14 to 16% earnings growth. I mean, far exceeds the kind of earnings growth you would see from a Taiwan or a from South Korea. So what's your call over there, sir?
Well, the way I look at the entire emerging market, or particularly this, Taiwan, South Korea, China, is that India is a strategic long-term bet, whereas some of these markets, including China, is a short-term tactical bet. Right. If you look at the valuations, I think the valuation-wise, India looks rich. When you compare them with other emerging Southeast Asian markets, including China, and some of the FIIs are a very broad universe. There are hedge funds, there are arbitrage funds, there are short-term funds, and there are long-term funds, pension funds, and others. Now, the long-term guys will definitely continue to keep betting on India and moving money to India. As far as the short-term funds and guys who have a short-term horizon, they will take a tactical step and probably move money into China, Korea, Taiwan, because the valuations there look attractive, and probably there is a rationale for valuation improving in these markets faster than they will probably improve in India at this stage in the short term.
All right. Sir, I think one of the questions I think is imperative for a retail investor over here is, we are talking about tactically, shifting your allocations in the short term. Can retail investors do that in the market? What's the best way for them to gain exposure to, let's say, a US market or a Taiwan market?
Well, I think there are funds, as we all know, there are mutual funds who have introduced schemes which invest in US markets and some of the other emerging markets. But unfortunately, the performance as far as other emerging market funds are concerned hasn't been anything great. And I won't really advise Indian domestic retail investors to try and take benefit of this short-term trend in the other emerging markets. US markets, of course, people have made money, funds have done very well. Obviously, US markets have done very well. But if you're talking about trying to benefit out of this short-term blip or short-term upside in Taiwan, China, South Korea, I think let's watch these from the sidelines. Let's focus on Indian markets. We still have enormous potential as far as short, medium, and long term is concerned in India also.
All right, sir. Another thing that fell on my radar was that Jio Financial Services has submitted an application to Reserve Bank of India for conversion of the company from an NBFC to core investment company. Now, can you help us understand what does this mean? Is it a nomenclature change, or the business is going to change for the company?
Well, I think what they're trying to do there, in fact, the plans which they announced, they're talking about an insurance company, they're talking about asset management company, they're talking about other types of lending and other financial activities. Now, if they have to do that, they need to do it under different licenses. Probably all this will become subsidiaries of Jio Financial Services. Now, as we understand the core investment company regulations, if an NBFC or an investment company has about 90% plus of its assets in investments in other businesses, so it becomes it needs to be classified as a core investment company. I think that's what they are trying to do. So I think structurally, what they're signaling to the market and the RBI is that Jio Financial Services will become the umbrella holding company for a clutch of financial services businesses.